This is James with Flawless Accounting Solutions. Today we'll learn about billable expenses in QuickBooks Online. We will first go over the purpose and the benefits of the Billable Expenses feature. We'll then take a detailed look at various settings and options associated with billable expenses. We'll explain how to record billable expenses and how to invoice them to your customers. Finally, we'll go over a very handy report to use in QuickBooks Online when working with billable expenses. This will be a detailed training on all aspects related to billable expenses in QuickBooks Online. Ready to learn something new? Let's go! There are many situations where business people incur expenses on behalf of their customers and have some sort of an arrangement in place where their customers will reimburse them for these expenses at a later time. Whether you're a contractor that buys materials for renovation of a house or an apartment, a law firm that gets reimbursed by their client for such expenses as postage, delivery, faxing, or clerical services, or an interior designer that gets reimbursed for mileage when traveling to the house they're working on. You need a way to track all these expenses across multiple clients from the point you incurred them, to when you later bill them out, to when the client finally pays you for these particular expenses. QuickBooks Online Billable Expense Feature allows you to capture and track these expenses easily and bill these expenses to your client whenever you need to do so. Now, before we go over how billable expenses work in QuickBooks Online, let's define what is a billable expense. A billable expense is a purchase transaction that is associated with a particular customer and is billable to that customer. A very important point to understand is that a billable expense is a non-posting transaction. What that means is that at the time of recording a billable expense, QuickBooks does not debit or credit any accounts from the chart of accounts. And so, at the time of recording, it does not have any effect on any of the accounts on your financial statements. As we'll see later in the lesson, a billable expense will only have an effect on your financial statements when it's billed to the client. Now, with all this information in mind, let's go over how billable expenses work in QuickBooks Online. We'll start by going to Settings to make sure that all settings for billable expenses are turned on. To get to Settings for billable expenses, we'll go Gear, Account and Settings, and then we'll choose the Expenses tab. Then, on the Expenses tab, go to Bills and Expenses section. Now, we'll need to make sure that several specific settings are turned on for us to be able to use billable expenses. Make sure that Show Items table on expense and purchase forms is turned on. This will enable us to add products and services to our expense and purchase transactions. Make sure that Track Expenses and Items by Customer is turned on. This adds a customer column on expense and purchase forms, so you can track expenses and items by customer. Without this being turned on, you won't be able to specify which customer the billable expense pertains to. Make sure that Make Expenses and Items Billable is turned on. When you turn this setting on, it adds a billable column to expense and purchase forms. It is placing a check mark in this column that will enable us to mark a transaction as billable. So this is a critical setting to enable. There are two more important settings that we need to go over. If you charge a markup on expenses that you get reimbursed for by the client, you would put a check mark next to Markup with the default rate off, and you would enter a percentage markup that you want to charge. I'll check this off so I can demonstrate how this works in an example I'll be going over after we adjust all the settings. And I'll enter a markup of 30%. Note that this percentage amount is not in stone. In other words, as I'll be entering my purchase transaction, if I decide that I want to charge a 50% markup, I can just enter 50% within the transaction itself, and that's the markup that the system will use, regardless of the default percentage reflected in the settings. The other setting is the option to track billable expenses and items as income. Now, what does that mean? Well, if you don't choose to track billable expenses and items as income within your settings, then at the time you create an invoice in QuickBooks Online to invoice these expenses to your client, QuickBooks will book this transaction behind the scenes against an original expense account. So we're done with adjusting our settings in this section. Notice that we've chosen to add a markup to our billable expenses, and we've chosen to track billable expenses and items by income. In addition, we chose to do it within a single income account. Now let's click Save, Then within our accounts and settings, we'll go to Advanced, Chart of Accounts. Now let's take a look at a couple of items in this section that relate to our current situation. Markup Income Account is where you can specify the income account that you want credited for the markup. Note that the option to choose an income account for markup will only be available after you turn on the setting to use markup in the Expenses tab. Also note that by default, QuickBooks Online will credit the markup income to an income account entitled Markup that it automatically creates when you enable this setting. And unless you want to use a different account to record markup income, you don't have to put anything here at all. So this box is only for when you want to use a different account from what QBO will use by default. Otherwise, you can just leave it blank. Billable Expense Income Account is where you specify the income account that you want to use when you decide to track billable expenses and items as income. The line for this setting will appear on the Chart of Accounts section only after you check off the box next to Track Billable Expenses and Items as Income in the Expenses tab of Accounts and Settings. By default, after you enable the Track Billable Expenses and Items as Income and choose to do it in a single account, QBO will set it to be booked to an income account entitled Billable Expenses Income Account. QBO creates this particular income account automatically and you don't need to change anything if you're okay with using this particular account. If you want to use a different income account, you would need to enter that account in the box here and press Save. Now, there's a very important point to understand and remember regarding Billable Expense Income Account, and that is the fact that even though you will specify the specific income account to be credited when the expenses are invoiced out to the client, QuickBooks Online may not necessarily use the specific income account. What do I mean by that? Well, let's just go to New Expense and demonstrate this point. There are two ways of recording an expense or a purchase transaction. You can use the Category section and directly enter the category expense from the Chart of Accounts. Or you can use an Item section and enter a product or service that is linked to both an expense account and an income account on the Chart of Accounts. Well, going back to our discussion of Billable Expense Income Account, here's what's important to understand and remember. If you record your billable expense directly through the Category section, and you're set within your settings to use the Billable Income Account, QuickBooks Online will credit this account when you invoice your billable expenses to your client. However, if you record your billable expense through the Items section, the system will not use the income account specified in the settings. Rather, it will use the income account that is linked to the specific product or service. Let me repeat this because this is a critical point. If you enter your expense in the Category section, and you're set within your settings to use a billable income account, QuickBooks Online will credit this account when you invoice your billable expenses to your client. However, if you record your billable expense through your Items section, the system will not use the income account specified in the settings. Rather, it will use the income account that is linked to the specific product or service. Now, let's illustrate with an example. Let's say we have a customer named John Melton. We're working on a project for John, and we have an agreement in place where he will reimburse us for our fuel expenses and for soil. We'll be recording two billable expenses, one for fuel and another for soil. Let's say we incur a fuel expense at a gas and oil station for $45. To record this expense and make it billable to John Melton, we'll go New, Expense. We'll then enter Payee, Payment Account, Payment Date, and Payment Method. Now, as mentioned before, we can enter an expense directly into the Category section, or we can enter a product or service through an Item section, where an item is linked to an expense account. In this case, we'll enter an expense directly into the Category section. We'll enter the amount of $45. We'll check off the box to mark it as billable. We're charging a 30% markup, and we'll enter the name of John Melton in the customer column. This instructs QuickBooks Online to make the fuel expense that we're recording billable to John Melton and to charge a 30% markup at the time that we'll invoice this expense to John. We will then save and close and move on to recording our second expense. Now, let's say we also incurred an expense to purchase soil from EDD for the project we're working on for John Melton. To record this expense and make it billable to John, we'll go New, Expense. We'll then enter Payee, payment account, payment date, and payment method. Now, notice the difference of how we'll enter the expense details for soil compared to how we recorded fuel in the previous entry. Here, we will not be using the categories details section. Rather, we already have a product set up that is linked to both an expense and an income account. We'll enter this product information in the items and details section. The description comes up automatically. We'll enter quantity, and we can enter the rate here if it's different from the default rate that's set up in the system for this item. We'll mark this as billable, and we'll charge a 30% markup. Finally, we'll enter a customer name to provide information for the system on who this expense is billable to. We will then save and close. We've now entered 2 expenses billable to John Melton. And before we proceed to invoice these expenses to John, and taking a look at how it affects our books, I would like to go back to an important point that was stated in the beginning of this lesson. Billable expenses are non-posting transactions. What that means is that at the time of recording a billable expense, QuickBooks does not debit or credit any accounts from the chart of accounts. And so, at the time of recording, it does not have any effect on any of the accounts on your financial statements. A billable expense will only have an effect on your financial statements when it's billed to the client. So here's the question. We just recorded 2 billable expenses. And since they're non-posting transactions, they have no effect on any of the accounts in our financials until they are billed to the client. So how do we see the list of our billable expenses? How do we know what's already been recorded as billable expense and has to be billed to the client? Well, there is a report in QuickBooks Online that serves that specific purpose. It's the Unbilled Charges Report. This report shows billable expenses and billable time that you have already entered into the system, but you have not yet invoiced to the client. It comes in very handy when you need to take a look at what billable expenses need to be invoiced out. In our case, here are the 2 billable expenses that need to be invoiced for reimbursement to John Melton, as well as the 2 markup items. After we invoice these amounts to the client, they will no longer appear on this report. Now we're ready to invoice our billable expenses to John Melton for reimbursement. In QuickBooks Online, we'll go New, Invoice. We'll enter John Melton's name under Customer. Notice that a drawer has opened up on the side that reflects all the billable expenses for this customer that have not been invoiced yet. You can click Add on a particular billable expense to add it to the invoice. Or if you want to add all of them, just click Add All. I'll click Add All to invoice both of these expenses to John Melton. Our invoice is ready. We will bill 2 billable expenses that we created earlier, as well as a 30% markup that we will charge our customer. I will save this invoice. And then I'd like to make an important point about the 2 markup amounts that we will invoice to our customer. When we view the invoice within our system, we can see the detail that includes the 2 separate markup amounts. However, the markup breakdown will not be included on the invoice that the client will receive. Let's just see how the invoice will look to the client. Go Print or Preview, Print or Preview. Notice that the markup amounts are not shown separately to the client. Rather, they are included with the total of each reimbursed expense. Also notice that while we have the detail reflected for our soil, we don't have any detail reflected for 5850, which was the fuel expense plus the markup. The reason for this is that soil was recorded through an item, whereas the fuel was recorded by entering the fuel expense directly into the category section. In QuickBooks Online, it's best to use items as they provide greater detail. Now let's go back to our invoice and let's take a look at the journal entry that QBO will make behind the scenes when we create the invoice. Click More, Transaction Journal. Let's go over this journal entry. We are invoicing out $481 to John Melton. This invoice is comprised of 2 reimbursable expenses and 2 markup items on those reimbursable expenses at 30% each. Now remember that we did adjust our settings in the very beginning where we instructed QuickBooks Online to track billable expenses and items as income and to use billable expense income as the income account. But we also said that the instructions within the settings as to what income account to use only apply when you record your expense or purchase transaction by directly entering an expense into the category section. If, on the other hand, you enter a product or service into the item section, the income account that will be credited when the invoice is created will be based on the income account set up within the item. So, we have a credit to billable expense income for $45. This was recorded through the category section and is based on the default settings. By contrast, the $325 is credited to landscaping services, job materials, plants, and soil. This is an income account reflected within the product service. And since this was recorded through an item section, as opposed to entering the expense directly into the category, the system used the account setup within the item. We have a debit to accounts receivable to increase accounts receivable by $481. We have 2 credits to the markup income account to record the markup income. And that's our journal entry. One last thing to note is that earlier we mentioned that unbilled charges report will reflect the billable expenses recorded in the system until they're invoiced to the client. Let's just take a look at our unbilled charges report to confirm. Now that we've invoiced all of his billable expenses to John Melton, they are no longer reflected on the unbilled charges report. And that is how you handle billable expenses in QuickBooks Online. If you received value from this presentation, please like and subscribe to our channel so you never miss another video. If you need an expert to work on your books, or would like to set up a one-on-one QuickBooks Online training session with an advanced certified pro advisor, please contact us through our website.